We're on the floor of the New York Stock Exchange with Jim Cramer, who's here to answer your Twitter questions. Let's start with the deal, Jim. We saw the energy transfer deal and Williams companies. One viewer writes in about Magnum Hunter Resources, a company that's lost some value. You've talked to the CEO. What happens with a company like this or others in the sector?
Well, I want to make it clear, we turn very negative on oil, we turn very negative on natural gas. We only have a couple, not that big exposure. Magnum Hunter is part of what I regard as being the surfeit of natural gas in the country. Sandridge too, Sandridge suspended its preferred. And so these companies' survival, you have to question them. Charitable Trust owns Energy Transfer Partners. Stock's been cut in half. It's got a huge yield. Nobody cares. Again, because we're in a bear market for energy. It's interesting. Carl Icahn says he's very, very negative, and he's been buying two that I really can't stand, Freeport and he also owns Chesapeake, but he's been buying Cheniere, which I do like. These are all dicey situations. Energy's in a bear market, so when you buy something in energy, expect it to go down.
Do you hold on to the energy stocks that you own already?
We sold some higher. We're going to look to be able to buy some lower because they do represent value. And by the way, notice the price of crude's not going down, but just the stocks.
All right, let's switch to a cloud company, Workday. Any thoughts on that one?
Well, Workday's got a big analyst meeting tomorrow, and I think that Workday's doing a lot of things right, but it doesn't make money. And when you don't make money, then people have been selling it. Again, I'm prepping everyone to be able to recognize that a lot of stocks that don't work now will work later after we have the sell-off that we're due for.
How about Rite Aid? It's got a PE of 3.5.
Look, Rite Aid reported a quarter that was a miss. They're doing this integration with this pharmacy benefit manager. Right now, CVS and Walgreens have been going down a lot, and they're really, really terrific. I think Rite Aid when at 9, I thought it was good, and when it was at 3, I thought it was good. Now it's at 6, I think it's good.
Jim, if we're overstating China consumer weakness, how about circling back to stocks like Yahoo and Alibaba?
Okay, well, Alibaba is in a bear market of its own because I think that it has a lot of bad money in it. I think that Yahoo reflects very little value. The trade had been to get out of Baba, short Baba, and be long Yahoo, and I still think that's a trade.
All right, I've got this bear market theme going with you today, so I'm trying to find a stock. I know, it's tough.
I'm constructive on a lot of the domestic stocks, but I just want many domestic stocks. But I highlight them all the time in real money and mad money. But I think I want people to know what they're dealing with, and they don't see Alcoa up a couple of bucks when they say Williams down on what's going to be a very good acquisition by Energy Transfer. So I just am trying to put it in the context of why stocks are going down, even though many of the companies are doing good things.
Jim Cramer, thanks as always. Remember, send your Twitter questions to Jim. Use #CramerQ. I'm Rhonda Schaffler for The Street.